Hello guys, welcome again to another Paribus video, and today we'll be talking about the FUD, the fear, uncertainty and doubt. Now let's go more in depth into this and see what has really affected the market so far and how everything is going to line up. So if you love this video, so subscribe and also follow me up and like the video if you like it so far. So I want you to pay much attention to this video. It's going to be a very interesting one. Now, over the past week, the crypto market has been a hit due to the unusual fear, uncertainty and doubt. Now, surrounding the potential for interest rate hikes, future regulations, it's easy to get sucked into the panic and feel that crypto is being unfairly targeted. Now, FUD, which we all know is called fear, uncertainty, and doubt, is part and parcel of the crypto space, and there are always plenty of narrative that the company is volatility. Now, in 2021, the favorite topic was China's negative approach to crypto. Now, fast forwarding to today, Bitcoin miners are back operating in China, and the government is seeking to make Hong Kong a regional hub for crypto. Now, meanwhile, the narrative has now switched to the negative approach the US government is taking towards crypto. Now, the failure of Southgate's banking is being attributed by some to the conspiracy involvement the Federal Reserve because they were potential competitors to the Fed's upcoming payment system. Now, when we focus on just crypto market, there's a tendency to see patterns that accord with the usual narrative. Now, if we zoom out and look at the situation in a wider context, it's easier to see that the current turbulence in affecting our market. Now, for instance, many people have focused their week on the collapse of Silvergate Bank because it's close tied to the blockchain industry. Now, while this uncertainty has an effect on the crypto market, it isn't the only bank in trouble. Now, on Thursday, shares in Silicon Valley Bank, that's the FVB, plummeted by 60% before the close of trade and dropped another 20% further after trading. Now, these contagions from the event wiped 50 billion of the value of the four largest US banks. It also hits bank in Asia and also crypto, wiping an average of 5% from the value. Now, the reason for this drop up reason is because of the value of SBD intends to liquidate some of the US Treasury bonds they hold and leading to a loss of 1.8 billion. Now, US bonds are held by banks throughout the world as a form of highly liquid security. Now, the problem of bond arises for banks when the Federal Reserve raises rates, which makes the bonds they hold become less valuable. Now, due to the natural or the nature of fractional reserve banking, banks only need a hold or to hold a fraction of their balance in a highly liquid asset. Normally, this isn't a problem. However, when confidence drops and people withdraw funds in masses, the bank tends to liquidate some of their assets to pay the withdrawals. Now, this has happened so much in the banking system so far that while the problem of Silvergate are related to the fear reaching effects of the FTX collapse and some of their previous investment choices, the continued interest rate increases by the Fed add to their vows. Now, the liquidity crunch that monetary tightening creates is intended to crash the economy in the short term to benefit its long-term health. Now, as we said many times before, the volatility of the present bear market will likely continue for a few months. Now, rather than getting pulled into guessing when the next bull run will be, and despite the false hope, it's better to zoom out and see the turbulence in the wide global context. Now, this helps to maintain confidence that things will change, while least avoiding the frustration to relieve layers and dips. Now, whenever the surface narratives or the underlying truth is that bull run needs liquidity and that will only come when the Fed starts to lower rates. Until then, it gives everyone more time to gradually accumulate tokens in the preparation for the next phase of the cycle. And this is an amazing thing for those who are crypto enthusiasts out there, and there's a lot of things that have been coming into the market system. So if you enjoyed this, probably enjoy it, and you should put your mind in that state of seeing more and more things coming into the crypto space, and hope to be a little bit optimistic that this thing is gonna help the forex market grow more and more. And this is what Paribus lets us to know every single time. If you don't know what Paribus is a cross-chain borrowing and lending protocol for NFT, liquidity position sensitive assets, and traditional crypto assets built for Cardano, and help us to see more and more in depth into the crypto space and see what happens so far. So if you like this video and you have learned so much from the video, please like it and subscribe, because I release videos just like this about DeFi and GameFi projects, and you don't want to miss any single one of them. So I'll catch you up in my next video. So that's for me today. I'll see you next time. Peace.